Greetings, everyone. Greetings, everyone. Greetings, everyone. Greetings, everyone. Welcome, welcome, welcome to another episode of Tigresh Realty. So, just making sure that I can be seen and heard. Let's see here. Okay. Here we go, y'all. All right. Gotta find myself. All right. So it sounds like I can be heard. Thank goodness. Thank goodness. Thank goodness. All right. Greetings, everyone. This is kind of like an impromptu situation because I am pressed for time. I need to be out of here. So I decided to go ahead and prioritize and get this done. All right. It's my goal to go ahead and get these out of the way and get this done. So now that we have this going, let me get back into my stream, y'all. All right, here we go. Greetings, 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 everyone. Welcome, welcome, welcome to another episode of T Gresh Realty. Excuse me for a moment. I'm going to get my notebook and my pen for a second. Thank y'all so much for your patience with me. Thank you so much for your patience. All right. So, for those of you who may not know me or have not met me, my name is Tanita Gresham. I am with, I'm affiliated with Coldwell Banker Realty right now. So, I've been with them for since 2020. I was licensed in Virginia back in 2007. Um, and that's when the housing market crashed. Okay. So, misconceptions about home ownership, that's what we're discussing today. I hope you all are having a wonderful start to your week. Heute ist Montag. Today is Monday, July 28th, everybody. And misconceptions, y'all. I'm going to just take some little notes here because I know how people think. So I want to make sure I don't forget before I start addressing some of these things, okay? All right. Misconceptions about home ownership. So, first of all, a lot of people feel like home ownership is unattainable. All right. That's number one. Many, many, many people feel like home ownership is something that's unattainable. They feel like they will never be a homeowner. Why even try? It's too much effort. Why bother? So I just want to point out, if you are feeling that way, I want to send some words of encouragement, okay? Because home ownership is definitely attainable. People think that it's not affordable, and I beg to differ. I feel like now is a time where many people should be, seeking home ownership. And the reason I'm saying that is because we're in some very trying times with the economy, y'all. And with that being said, rent is actually going up and increasing and increasing and increasing and increasing. It's not going down. With a mortgage payment, more than likely, your mortgage payment is going to stabilize more so than your rent. Now, I know that there have been people talking on social media about their mortgage payment increasing, and I'm going to get into that as well. Okay. So let's get into the attainability part because that's very important. That's a very important piece to this puzzle. All right, sorry, I'm just sending out some text messages and notifications about the video because I know a lot of people probably were not aware that I was going to do this live stream or go live, but I will be doing these Zoom meetings very regularly because I think education is important in terms of home ownership. Why is it that people feel that home ownership is not attainable, y'all? Well, there's the money part, okay? People keep hearing about all of these exaggerated stories about homes are unaffordable. Homes are unaffordable. Think back to like 1996, okay? 1994, back in the 90s, if you all were around during that time. Back then, you could afford a three-bedroom house, two and a half baths. You could have a eat-in kitchen. You had a dining room, a living room. Sorry, this is one of the people that I sent the live stream to. So you could get a dining room, a living room, and a den. How do I know this? Because my parents were able to afford a home back in the 90s, right? And those homes back then were going for like, I don't even know if they were $100,000 back then, or they might have been like a little over 100, if that. I think they might have been going for like 96,000. I have to ask my daddy because I can't remember. Yeah, I was much younger back then. All right, so now in today's time, what has happened is homes have gone up. So let's fast forward from like the 90s, 1996 era to around 2000, we're going to say 18 to like 2020-ish, 2021, 2022-ish, okay? Around that time frame. So I'm going to say around 2018 to 2022. Really between 2018 to 2020. Let's stop it between those time frames. Fast forward there, you could get a 3 to 4 bedroom home, okay? You could get a two-car garage, okay? You could get two and a half baths, okay? With I want to say about a quarter acre of a yard space, okay? A little under quarter acre, around that acreage. And then I want to give you the square footage. I would say between 1,600 to 1,800 square feet of space. Okay. So that's a decent size home. All right. That's a decent size home. It's a comfortable size home, 3 to 4 bedrooms. And if you didn't want the fourth bedroom, you could get a loft. Okay. Utilize that space. Two-car garage, two and a half baths. How much would that house go for around 2018 to 2020? You all, that house was going for $216,000. So I just want you to think that the affordability of that home went up about $100,000, okay? Give or take. All right, give or take. Now, that same house that we just described, this 1,600 foot to 1,800 foot square foot home, it had the 3 to 4 bedrooms, the two-car garage, the two and a half baths, and almost a quarter acre of land space. I want you to fast forward to 2023 to 2025, okay? Because if we do our CMAs on these houses from then to now, that house is now going for, I want to say 350 to around 365, if not 370. So what has happened? That home has increased by another $100,000 in a matter of 5 years, 5 to 6 to 7 years. So, why am I going over this? Okay, the reason that I'm going over these numbers, okay, and this is just my little notepad right here. I don't even know if you'll zoom in on it. This is my notepad because I could actually pull up some of my clients' homes and let you see how their home value has increased in the last 3 to 5 years. This is what real estate does for you. So when they say that you are basically growing equity, this is what equity is, you all. You're building up basically like a savings account in your home value. Okay? This is why when they say build generational wealth, this is what they're talking about. Now, let's look at people that say, "Oh, yeah, I don't believe in home ownership," and that's fine. This is only for the people that want to be educated on home ownership and how this works. Okay? So let's look at your job. Okay. Some people have been on the job for 10, 15, 20 years, 12 years. If you're not investing into a 401k, you should be investing into a 401k. That is something that I did much younger in age. At first, I thought, oh, I don't need a 401k. I want all of my money. But yeah, I was like very young back then. And then something in me, because I was telling my parents about it, and they were saying, oh, that's something you should do. And I guess when you're younger, you don't look at it that way. But I went ahead and invested into my 401k and I allowed the company to price match. So they were price matching at 6%. And that's what I was putting in. I let them take it right out of my paycheck and put in the 6%. Okay. So that's free money basically coming into your account. I know people say the 401k is a scam, but you all, it really is money. Because I spoke to one of my directors and she was talking to me about this on another job that I had when I used to do insurance claims. It really is a way to build a savings for yourself because most people are not going to put that much money into their savings for themselves. They don't have the discipline. Things come up, things are always happening. People always want stuff. You might have children. It's a lot that goes on. So if you allow the company to price match your money, you are doing yourself an advantage. That's just my personal opinion. I'm not a financial advisor. All right. So I want you to think about over the course of years, there are some companies that you're not fully vested until you're there for a certain amount of years. So, what does it mean to be fully vested? Fully vested means, okay, year one, you might put in 6% of your funds and the company matches 6% of your funds. So, year one, year two, maybe year three comes and you get laid off, terminated, you leave the job, something happens. They might say, well, you're not fully vested until 7 years. That means you don't get all of the funds that's in the 401k. You only get the amount that they will allow you to get out of that 401k. So you'll get your money back. Okay. You have access to your money, but the money that they matched, they might not give you that entire amount back until you have reached like 5, 6, or 7 years until you're fully vested. Say you have reached 7 years, you're in there for 15 years, you have all this money saved up. I don't know. Maybe it's about $30,000. Maybe it's 20, 25, because the money adds up fast. Maybe it's $17,000. The money is there. Why am I going over 401k? Many people don't know that you can use 401k money for your down payment. Okay. So for those of you who think, oh, I don't have any money saved up, I can't get a house. This is what I'm talking about with the attainability factor. Home ownership is attainable. So usually it's 3.5% that you need to put down of the purchase price. Okay. 3.5% of the purchase price is usually what it's going to be. So let's get some calculations underway. Okay. And y'all have a DoorDash order coming my way because I am extremely hungry. So I might have to get up in just a second. All right. Let's look at a house and a typical price point of a house now that's in Charlotte. We're speaking of Charlotte. Okay, is going to be around $400,000 and up. If you're looking at new construction, if you're looking at 3 to 4 bedrooms, a two-car garage with just basic. So we're going to say 400 a $400,000 home, and it may go up depending on the location. It may go up depending on whatever options are in that home. All right, because you have townhouses right here in Charlotte that are going for 300, 350, 380s. All right, so this is why I say if you can afford a house, the quicker you get in, the better you are off financially. Instead of people that like to say, oh, I'm going to time the market. Oh, I see they're cutting prices on homes. That is a misconception. That is another home buyer misconception, which is why I'm having this live stream right now and going over this Zoom meeting. All right, so 3.5%, 0.035, that's about $14,000, okay, that you want to have for down payment savings. Most people don't have $14,000 sitting in their account. Most people, as we know in America, don't have $5,000 in their savings, let alone $1,000 or $500. So, this is why the 401k money can come into play. Also, if you have a 403b, which most people, if you are a teacher, if you work in the school system, you will be enrolled into a 403b instead of a 401k. A 401k is given to you by your employer, which is something sometimes you're automatically enrolled into it, and sometimes you will have to enroll yourself into it. So reach out to your HR department if you're not aware if you have one or not. All right. And then there's an IRA, which is if you are self-employed. This means you are probably a 1099 contractor or you receive W-9 forms for your income instead of a W-2. Why this is important is because you would have to actually contribute money into your IRA on your own. This is not something that the company does for you. Okay, so those are the differences in the retirement savings plans. If you have departed from a company and you're not aware that you have, savings somewhere, you can always reach out to Vanguard. You can reach out to Empower, that's Empower, and you can reach out to Fidelity. These are some of the retirement savings companies that hold retirement accounts for a lot of different companies. And a lot of people are not aware that they have money sitting in one of these accounts somewhere. Okay. So I'm just saying that because a lot of people don't know until years later. I didn't know I had this. I didn't. Yeah, you have it out there. You just didn't know about it. So that can happen too. And sometimes when you depart, they will automatically send you a check, or you have to request a check, and then you can actually roll that money over into another retirement account. Now, I am no longer working for the retirement company that I used to work for. So reach out to a financial advisor if you don't know how these things work, okay? I feel like this is important because are some very basics when it comes to financial literacy that a lot of people are not aware of. And so that's why I'm going over that as a licensed realtor because this is very important and you being able to have funds to secure a home. So now we've talked about attainability, why it is important to get in when you can, how we see over the years the cost of houses and homes have increased is because of inflation. Even a car back in the 90s is not going to be the same as it is right now in 2025. The cost of groceries back then is not the same as it is in 2025. The cost of gas, I remember when you could fill up I could fill up my car on $10 and gas was 99 cents at the sheets. All right. That's no longer the case today. Gas now is what, $2.89, $3 and up. If you put premium in your car, $3.50, depending upon the state that you reside in, right? Out here in Charlotte, you can get gas for like $3, $2.89, something like that, or you can use your rewards and your fuel points. All right, and that's if it's unleaded. Now for premium, it's around probably $3 and some change. All right. So this is just telling you a step by step, you know, information on how the market increases, on how affordability is reduced. Let's talk about paychecks. Let's talk about people's pay. People's pay does not really increase according to inflation. We all know that. Right now, in the state of North Carolina, Minimum wage is still $7.25. So jobs are starting to pay more compared to what they did back then. I remember the first job I got working at a health insurance company, y'all. I was making less than $20 an hour. All right. That was many years ago. And I was able to afford an apartment for myself, pay my car payment, buy groceries, went to school, was paying for books. I had paid for all the necessities for myself. I had, of course, I had health insurance through my job and things like that. But I was actually, and I had decent credit. So if I could do it making under $20 an hour. I wasn't even making $15 an hour, y'all. Actually, I think I might have had two jobs. So I did believe in multiple streams. So that's something too that I like to stress. My motto, all right, is be the CEO of your financial future. How do you do that? By creating economic ownership. How are you going to be a CEO if you don't own anything? If you don't own some form of real estate, if you don't own some form of business, if you don't have another way to make money outside of your job, you're kind of putting yourself in a very vulnerable state. And back then, I did not have the tools that I have now. I did not have the knowledge that I had now. But now we're in the age of social media where things are so attainable at a fingertip that is no reason why we should not know how to start a business. An LLC is very easy to start. A Duns and Bradstreet number is free to attain. So always have another way to make money outside of your job, outside of one job. Even if you work two jobs, you can do that. But I would always say have something that a job can't take away from you. So this is another reason why I attained a real estate license because after working 8 hours, I'm sorry, 8 years, close to 8 years in another insurance field. I worked 12 years in health insurance, and then I did some banking. I worked for some banks, and then I mean I did a lot of other things in between, y'all. I've had a lot of. I'm very employable. I've had a lot of jobs on the course of me working. I've been working since I was 15, and what I have learned over the course of working all these years is that a job is not necessarily secure. So this is why I always say have something else to fall back on that a job can't take away from you, such as a license, a certification. And yes, I do have multiple degrees, but those degrees, a job is going to be contingent on these degrees sometimes. And you don't have time sometimes to go and get degrees and to put these degrees to work for you, which they can work for you because they've worked for me. Because something else that I do outside of real estate is working with children. I've tutored children, substitute taught. And that's another caveat in its whole entirety because a lot of children are out here are illiterate, cannot read, write, cannot comprehend math, don't know the basics when it comes to being able to take a test. Their skill set is very low. But this is why I'm having this conversation about home ownership because I want people to be literate when it comes to home ownership. So now we see that home ownership is attainable because you may have these things working in your favor. Okay. So, attainability, what do you need? Okay. And I feel like I repeat myself so many times, but there might be someone who has not heard this information yet. You need a credit score. Out here in Charlotte, there is a home, it's called the House Charlotte program. If you're interested in that program, please feel free to reach out to me at 980-428-2333. You can also email me at t.gresh.realty@gmail.com or tanita.gresham@cbrealty.com. I can actually set you up with the lender that works directly with the House Charlotte program. There are three different programs that you can qualify for, and these programs allow you to stack them on top of one another. Outside of that, it also works with new construction. So if you have a credit score of at least a 640, at the bare minimum of a 640, which is not that hard to attain, you may qualify for this program. All right. Remember, it's the House Charlotte program. Also, you want a debt to income ratio of 45% or under. Okay, that's how much money are you bringing in, how much money is going out. All right, keep that at 45 or under. The lower it is, the better it is for you because that's the better your credit score is going to be and the more affordability you're going to have for your home purchase. And it gives you more flexibility. You're going to be more comfortable. You're going to have more wiggle room. Another thing that they're going to look at are 2 years of steady income. 2 years of steady income can be a W 2. So you're going to need 2 years of W 2 employment and, or, not and, but or 1099. So if you're a W 9 employer, you're going to need 2 years of that. They're also going to look at the last 2 years of your taxes. So if you have not filed taxes in the last 2 years, go ahead and file your taxes. All right. Because they're going to need that. They're also going to look at the last probably around 90 days of your bank statements. So, whatever bank statements you have, you're going to have to supply that to the lender unless you are purchasing these homes in cash. Now, if you have cash, we don't really need to have this conversation, but we will need to see proof of funds. What is a proof of fund letter? Well, some of my clients have shown me basically a statement from their bank showing the funds in their account, including their name and their address on it, so we know that this belongs to them. Now, they can cross out their bank account information. I don't need that, but we do need a proof of funds statement or a letter, something like that from your credit union, your financial institution. These are ways that you purchase a home. All right. Very important. Also, if you are legally married or you feel like you're separated, that plays a factor into the home purchase because if you're still married and you're separated, then that means that spouse still has legal stake to a home that you purchase. So if this is something you want to do, then you need to get a full divorce before you move forward with purchasing. All right. Now, if you don't want them to have any claims over if you sell the home, you can do something called a quit claim deed. Okay, a quit claim deed can be done by a real estate attorney. If you're looking for a real estate attorney, please reach out to me because I have a list of vendors that we work with all the time that can help you with your real estate needs and your legal needs. All right, so it is my responsibility to know real estate law as well, but I am not a real estate attorney and I cannot practice as an attorney, all right? So what I can do on the contract is fill it out, but I cannot write the contract, all right? So that's the difference between the realtor and the a real estate attorney. We cannot write the contract, but we can fill out the blanks in the contract for you. So that is the part on attainability. Let's move on to misconceptions that I've heard about people who have purchased or people who have never purchased or rumors that are going on in social media. I keep hearing that they're going to take the home from you as soon as you miss a payment. That is incorrect and that is not true. That is falsified information. They don't just take your home because you miss a payment. So let's think about Dante London. If anybody has been watching Dante London, he is a YouTuber that was making really good money on YouTube and started to look around at apartment homes. Okay, so he decided he wanted to move out of Section 8 housing and move into a market rate apartment. And that market rate apartment, I don't remember the amount. I think it might be like 13 to $1,600 a month where he lives. I think he's in Detroit. I'm not really sure. All right, so Section 8 is different than, living in a regular apartment. What ended up happening in this YouTuber situation, and he's posted it all over the internet, so I'm not telling his business, but he's facing eviction, and that's something that's going on right now. I keep hearing a lot of people talk about eviction going on in Charlotte, going on in North Carolina, going on across the entire nation. That's a big topic right now. Eviction, eviction, eviction. It's a very stressful situation to be in. It's very unnerving that we should even have to deal with this as a country because if America is one of the richest countries in the world, I don't feel like anybody should have to face homelessness or eviction. I just don't agree with that. And I feel like if this government really wanted to fix that, they could. But this is why I'm here, because realtors are here to help you solve your housing issues through home ownership, okay? What I will say is this: there's a difference between being in a rental and being in a home. Being in a home is more secure, and the reason I'm saying that is because the bank doesn't just come take your home because you missed one payment. It doesn't happen that way. Say something happens and you lose your job, you lose your income, you lose your way of making money. This is why I say have multiple streams, have something outside of your job to secure yourself. All right. You can easily do that by having a certification or a license. As soon as I obtained my license for real estate, I was able to start right away making money. I have a notary license. You can start right away making money in that. I have a clothing brand as well. I actually printed this shirt, even though it says Co-op Banker. I printed this myself. I have other ways of making money. So I can sell clothes, I can print shirts, I can do, jobs that notaries can do. I can do things in real estate to make some sort of income for myself outside of having a regular job. I know there are people that do gig work as well. So you might want to do DoorDash, there's Uber, there's Lyft, there's Uber Eats. Do something outside of your regular job to make more income, you all, to financially try to get yourself back on track. All right. If you have a car and a valid license and insurance. So those things are definitely important. Now, getting back to the fact that they said they take your home and being evicted. So apartment complexes are less lenient when it comes to you paying your rent most of the time, unless you're dealing with like a private landlord that's very understanding that allows you to do this. But once you start getting, I believe, 30 days or 14, what is it, 30 days or 14 days? I can't really remember, y'all. They want to take you to court. Okay, so they're going to put a note on your door. They will summons you to court, and they're going to give you a certain amount of time to actually pay that rent that's due. All right. And by that time, that rent is due, and probably your next month's rent is probably going to be due really soon. And you're going to have to pay court costs on top of it. So not only is Dante London going to have to pay the 13 or $1,600, he's going to have to pay that court cost. Okay. On top of it. Now, let's look at your home. If you say, okay, rent is due usually on the 5th of the month, your house mortgage note might not be due on the 5th. Usually it's due on the 1st. All right. Some mortgage companies say, okay, you have until the 8th. That gives you 3 extra days to make that payment. Now, what happens if you don't make your mortgage payment by the 8th of the month? You have 30 days, all right, before they report it to your credit report. Now, what's going to happen is they might charge you a fee. Some mortgage companies might be a little different, but they might say, okay, well, since you didn't pay by the 8th of the month, you didn't pay your mortgage payment by the 8th of the month, you still can pay it within that month. Pay it before those 30 days are up, or we're gonna ding you on your credit report. But we're gonna charge you a $45 fee for being late. And even if you pay it on say you pay it on the 30th of the month, okay, well, it counts as paid. You paid within that 30-day window. So bam, it's already paid. The only thing you had to pay was that late fee, whatever it is. So you're good. You can even call your mortgage company and have a talk with them and say, hey, something came up this month. Maybe there was car repairs. Maybe there was a hospital bill. People have surgeries. There are so many things that happen in life. Mishaps, you have children, all types of things can go on. Call your mortgage company and have a conversation and let them know what's going on. They might say, guess what? We see that you have been on time, for the last 1 to 2 years. We're going to go ahead and do a courtesy fee for you. We're going to waive that fee. You have a one-time courtesy fee. We're going to waive it. So just pay it in that 30-day window and you're going to be fine. That's the difference between renting and being evicted versus being in your home and thinking that it's going to get taken because you missed a payment. It doesn't work that way. Now, let's say that something very tragic happens. You lose your job. You don't have any other form of income because you didn't have another business to make money. You didn't have another job to make income. You're not doing any gig work. You're the sole provider of your household. Maybe you don't have another partner to fall back on and you have children or you're by yourself. It doesn't matter. Whatever the case is, call your mortgage insurance company. Not the mortgage insurance company. Call your mortgage company, right? Call them and let them know what's happening with you so they can give you some options because they can put you on a repayment program. So that means they might say, okay, so you can't pay this month. All right, so we're not going to make you pay this month. We're not going to report you to the credit bureau as being late, but it's going to be reported that you didn't pay, and we're going to defer your payment for this month. So make sure you pay it next month. Or they might say, how many months do you think it's going to take for you to get back on track? Is it 3 months? Is it four? Is it five? They can go up to 6 months, y'all, and they can defer your payments for up to 6 months. And they're going to say, okay, we're going to fill out some paperwork. So go ahead and look in the mail. We're going to send out some papers for you. Fill these papers out and you fill the paperwork out, you send it back in within the amount of time, and they're going to go ahead and defer those payments. When you have 6 months, you all, to get yourself back in gear to try to get these payments going again. So usually that can give you some breathing room so you're not so stressed out about a mortgage, right? Because that's one of the biggest things that people pay every month is either the rent or the mortgage. That's the thing that's very, very urgent. It's a very urgent matter because that's your place of residency. That's where you need a place to live, right? You need a habitat. You need some form of shelter. So these are things that you have as a homeowner is you have flexibility, okay, to stay in your home. Now, there are also programs in the state of North Carolina. There's something called the North Carolina Housing Assistance Fund. All right, I'm gonna write this down because I need to send that to one of my clients. North Carolina Housing Assistance Fund. Good. I'm gonna circle that because I need to send that to someone. The North Carolina Housing Assistance Fund has actually helped people out during the times of COVID who were falling behind in their homes because of COVID, because a lot of people lost jobs because of COVID. So, what this fund did is you had to fill out paperwork for this and you would send it in. If they approve you, then they would actually catch your mortgage up for you. They would pay your mortgage. If it was 1, 2, 3, 4, 5, 6 months, they would pay and catch your mortgage payments up for you. All right. They would do this for you and pay it. Now, there are other funds outside of this. There are other programs outside of this that they have available. So this is why it's so important to reach out to your mortgage company because they know of other assistance and funds and programs that can actually pay your mortgage for you while you're going through a hardship. It's called a hardship, y'all. Now, as far as rent is concerned, your leasing company is probably not going to give you all these options and windows of opportunity. So you're really at the discretion of yourself in finding out what rental assistance is out there. Okay. So while this is happening, guess what's happening? You are still accruing equity in your home. Now let's look at people that say, oh, I'm just going to save. I'm going to save. I'm going to save and stay in my rental. Rent right now, the average cost of rent. Hold on, y'all. I think they dropped off my DoorDash order. It was dropped off. Just a second, y'all. I gotta go to the door and get my DoorDash. I'll be right back. Don't go anywhere. All right, y'all. I am back. I am back. Shout out to Starbucks. Yeah, I've been cutting back on door dashing, getting things dropped off. But sometimes I feel like this, you have to choose what's important. What's more important to me over money is time. My time is very valuable. So instead of me going to Starbucks, waiting, being hungry, getting this because I need to go grocery shopping, that takes time too. I said, I'm just going to pay the extra, what is it, $6, 6 or 7, I don't know, $6 for this cheese Danish that I just ordered. Paid like an extra $6 for it. I'll just pay that because it's saving me time versus the 15 to 20 to however minutes I have to go and get it and all. It's just my time is more important. Okay. But anyway, let's get back to it. So these are some things that you have as an advantage for being a homeowner. So see, those are misconceptions. There are many different ways you can stay in your home. It's very hard to get out of your house. If you wanted to get a roommate and you wanted to say, okay, let's split this rent. We have 3 or 4 bedrooms. We're going to have everybody to, pay. You could do that. In your lease, you got the maintenance people coming in there. They're paying attention to who you're bringing in and out of your apartment. If you add someone onto the lease, they need to be 18 years or up. They need to sign a lease agreement or they need to be added onto the lease. So they are very much in your business. Okay. Also, people talked about the housing market crash. I don't hear that being an issue so much today because that happened back when I was a licensed realtor back in Virginia during 2007, 2008, 2009. That is when I saw a lot of foreclosures taking place. And a lot of these people, believe it or not, were in real estate. A lot of these people were in construction. They were working for home builders. They were home builders. I also worked for a very large bank here that is founded in Germany. So do your research. You might know who that is. And I worked in the collections department, meaning I had to call people that defaulted on their loans and credit cards. And these people had lines of credit that they had taken out on their house. I didn't understand back then how people could have a line of credit for $30,000, $45,000, but it is possible because they were trying to stay afloat, right? They had gone through their savings, gone through their 401k, couldn't stay afloat. This is what happened. So what happened during that time is when the lenders were lending the money, they were not making sure these people could actually afford these homes. So now there are more different things in place. Before you make it to the closing table, they're going to pull your credit not once, not twice, but 3 times. Even the day of closing, they might pull your credit to make sure you have not opened up any of the lines of credit, to make sure everything is still how it was when you first applied for this application to purchase a home, because that was not going on back then. Also, the adjustable rate mortgage was a big thing back then. People would get into the home at a certain rate and then their rate would increase. They did not have a fixed rate. So that was another thing. They could not afford those adjustable rate mortgages that kept going up. So this is why it is strongly encouraged to get a fixed rate mortgage. That's why I say usually your mortgage payment will stay steady. Now, what happens in a rental? Your rent usually increases every time you renew the lease. This is why you have a lot of people that keep moving and keep moving and keep because their rent keeps increasing. Now, the average cost of a rental right now is around, let's say around 1800, okay? 1800 to $2,000. So if you're paying around $1,800, that means you're paying 21,000, we're going to say around $22,000 a year. $22,000 a year. So it's 22 to $24,000 a year that you're paying in just rent alone. Now, what happens at the end of your lease? You don't get that money back, okay? Now, what happens if you have a mortgage payment for around 1,800 to $2,000? Okay. Y'all, I don't know why somebody tries, they always do this. Let me put my phone on do not disturb. It never fails, okay? So you have a mortgage payment of 1,800 to $2,000, all right? So depending on your financing, depending on your location, there are a lot of different variables in play, but you could have a decent house for that price. I'm telling you, you could have a three-bedroom, two at least a three-bedroom, two-bath home with with a garage and a nice size yard, depending on where you move to, for $1,800 to $2,000. You could have that for yourself. What's going to happen? You're going to be paying the same amount per year. However, your home is gaining equity. That means you got money going into like this virtual bank, which is included in your home equity. Okay. So I should pull up. I want to show y'all something too. Okay. So I'm going to pull up an address. All right. And I don't know if I can share this address, but let me see. Um, so y'all can see what equity does for the homeowner. Okay. So, all right. I'm going to pull this up. I'm going to try to share my screen with y'all. Hold on one second. Okay. Thank you for being so patient. All right. Here we go. Let's go to Google. Okay. All right. So we're going to look at a house. All right. Now, just a second, y'all. Okay. All right. Just a second. All right. So here we go. I'm going to try to share this so y'all can see. All right. Go to video and hold on. Share. All right. I'm sharing my screen. So I'm hoping that you'll be able to hear me while I talk. Let me actually get the remote and turn myself up. Make sure I can hear myself for a second. All right, I'm sharing the screen. All right, let's see if I can be heard. Just checking to see if I can be heard. YouTube is a little behind, but I think I can be heard. I'm not all the way sure, so I'm gonna wait till I can hear myself on YouTube. All right, can I be heard? Am I heard? Okay, great. I can be heard. Okay. So what I'm showing you right here is a house that's off the market. Now, keep in mind, it does say Virginia. You know, I used to be licensed in Virginia as well. Um, but this is the same concept that's going to work all across the nation, even here in North Carolina. I could show you one of my clients' houses, but I don't want to go through all that because I have to blank out their address and stuff for privacy purposes because part of our fiduciary duties as a realtor is confidentiality. And I don't want to be putting people's addresses out there because it's easy to find out who lives at these places. So I'm just using this one right here. Okay. So this is a different state. This is Virginia. Now, right now, they're estimating, and Zillow is not all the way accurate, y'all. I just have to say that. Realtor.com is not all the way accurate, okay? But it's in a ballpark. I want you to see what equity does for you. So this home was built in 2019. Okay, they didn't actually close on this home until I want to say 2020 or 2021. Let me see. I can tell y'all. They're estimating, hold on. Okay, here it is. It tells you right here. So they actually closed on this house on June 5th of 2020. Was I there? I believe I was there when they were looking at the home or purchasing the home because I remember they had to do an extensive amount of yard work and they had to dig up the street because this house had some very bad drainage issues in the yard, y'all. There was another pending sale. I'm not going to tell you who that was, but I know who these people were that was looking at the home. And they decided to go with a different house. So, anyway, let's keep going. This house was actually sold on June the 5th, and I would believe that the house didn't really sell because I think it was because of the drainage issues. So it was listed for sale back on May 20, 2019. Now I want you to look at the price. It was actually on the market initially for 474, went down to 464. Why did they drop it? Now, this is the misconception when people tell you, oh, house prices are going down. They're looking at stuff like this, okay? But there's a big significant difference between what I just explained from 1996 up until 2025. House prices are not going down, they're going up. All right? So that's a misconception of home ownership or home buyer or home purchasing. Okay, they're going up. It's just that you see these little incremental decreases. So you're thinking, oh, they're slashing prices. They're not really slashing prices in the extreme measures of what we've seen over the course of 20 to 30 to 40 years. Okay. So back in 2019, this is the price of the home. It went down to 464, so it went down by $10,000. Went down again to 459. Then it went down to 444. All right, so let's see what price it closed at. It closed at $450,000. All right, it was sold. It was taken off the market at $450,000. So, over the course since 2020, this is 5 years later, there's an estimated over $100,000 worth of equity in that house. All right. And you think this is not the case. This is the case. These people are sitting at over $100,000 worth of equity in their home. And it's not just, the price point of the home. This could be a home that's less than this, okay? Because that's the same scenario that worked for me. I could tell you that, this happens a lot for people when they purchase homes, and a lot of people are not aware of, what home ownership can do for you. So, what was it, 450,000? And then we're going to compare that to 684 500. Now, those numbers, the 684 500 is not exact. There are different variables that come into play when you talk about the real value of this home, okay? So let's take away the 450, okay? And now, so I stand corrected. These people are sitting at over $200,000 worth of equity in their home by my calculations, okay? Now, it might be a little bit under that amount, okay, give or take. It could be a little bit under that amount because then we have to actually go into that neighborhood and do what's called a CMA, a comparable market analysis on this house. There are only seven, I think, to eight homes in that neighborhood. So we would actually take this house and compare it to the houses that are like it, same square footage, and really all these houses are pretty much similar. So you would probably take like around three of those homes that are very similar to this house and compare and contrast. But yeah, I would say this is pretty accurate. It's not all the way 100% accurate. But that I'm just giving you this as an example, okay? So you can see what this does. What does equity do for you? Now, I want you to tell me, for the people that say they're just going to rent and save, in 5 years, can you save $200,000? In 5 years, can you save $100,000 on your job? In 5 years, do you think your 401k on your job is going to pay you out $100,000 in 5 years? Let me ask you this. In 5 years, do you think your 401k is going to pay you $200,000? So, if the answer is no, this is why they say home ownership helps to build wealth. All right. There are different things that people can do with the equity in their home. Yes, they can utilize the equity for emergency purposes. They can utilize the money if there's a medical expense, a surgery, home maintenance, home repairs, upgrades. This is what people do. And this is what equity in home ownership does. It helps to provide security and stability. All right, versus renting. So now that same person Let's say that same person, that was renting, they finished their lease. Okay, now say they want to renew again. Now their lease is going to go up, what, another extra $100? So now instead of paying the 1,800, they're paying 1,900. And this is being conservative because most people are paying about $2,000 right now. So now they've paid 22,800. You might as well say 23,000. So 23,000 plus 22,000, they've paid a total of $45,000. Guess what they could have done if they had purchased? They could have had possibly, potentially 10 to 15, and in some cases, I've even seen $30,000 worth of equity already built up in a matter of 3 years. Now, we just saw, okay, a scenario of where this house, a real life example, okay, because I do have some knowledge of who those people are in that house. We've seen a real live example of in 5 years how they have acquired $200,000 worth of equity in their home. But you still have people that have never owned before trying to tell you about home ownership. That's why I said there are misconceptions about home ownership, and that's something that I want to actually be able to touch on. So as far as the housing crash, we've tapped on that because now they make sure that you can afford that loan. If you can't afford it, even at the closing table, they will deny your loan. I have heard stories of where this has happened to people. One of my colleagues told me that she had someone that was going to apply for a loan. They had made it to the closing table. She wanted to buy a car. And I guess she got convinced that, oh, you can buy the car over the weekend before closing because they're not going to know. I don't know how this happened. She went and bought that car over the weekend. They pulled her credit, and the realtor got the phone call and was like, Miss Such and Such, I'm sorry to tell you this. We're not going to be able to close because your client went and purchased a car. So that changed her whole financial situation, her whole affordability level, and everything. Till this day, this lady is still renting, from my understanding. And she told me this story like maybe a year or two ago. So I think she's probably still renting. I meet a lot of people that, have told me, oh, I'm just going to wait because I want X, Y, and Z. And you're a first time home buyer. Guess what? Some things you're going to have to negotiate on. Some things you're going to have to actually say, hey, wait until I can get another house. So the house that I just showed you, I'm pretty sure I'm assuming that's probably not like a first time home buyer situation, okay? But once you have a house and you've been in there for a couple of years, 3 to 5 years, and you've built up some equity, it puts you in a better financial situation because now you can sell your house. Now, the money that is built up in equity, you actually get that money coming back to you, okay? After your mortgage is paid off, after whatever realtor fees are paid off to help sell your house, after the taxes, everything is taken care of in that transaction, any liens on the house. The rest of that money, thousands, I'm talking tens of thousands of dollars, comes back to you. Now you have more affordability to upgrade your home, upgrade your neighborhood, upgrade your lifestyle if that's what you choose to do, or have money to start a business. So whatever you choose to do with those funds, all right? So that's another reason why people say this is building generational wealth. All it takes is for you to get in your house and maintain those payments and stop being I don't want you to be discouraged because financial hardships are going to come up. Financial hardships came up for Dante London being in a rental on YouTube, and he's facing eviction. Now, what if he had a house? More stability, more equity. And if you want to sell your house, you have that option. Now, when we talk about down payment assistance and they say, oh, if you get $15,000, worth of assistance, you have to pay it back. What is $15,000 when you're sitting on $100,000 worth of equity? So you still get, okay, you minus that, that's 85,000 minus whatever. So you're still winning in this situation. And back to the House Charlotte that I was talking about, the House Charlotte program. So there are three different programs. They allow you to stack them. You need a credit score of 640. You need a debt to income ratio of 45 and below, 2 years of steady income that can be 1099 or W-2, and you need to have filed 2 years of your past, 2 years of your prior tax years, plus the bank records and bank statements. All right. So that's really all you need. Um, Also, you could stand to gain up to $145,000 in down payment assistance, okay, in Charlotte. So there's really no way or reason to say home ownership is not attainable because it is. I'm telling you how it's attainable. If you want to, you can go, you don't have to do this by yourself. Maybe you have a significant other or a spouse. Put your incomes together. If if you're in a roommate situation, you could do this in college. Hey, if you've been friends, all throughout high school and y'all trust one another, 2 to 3 people could actually go in and apply for a house and split that mortgage payment. Okay, say your mortgage payment is 2,400, 7, 14, 21. Hold on. 8, 16. So you're all paying $800 a month. 816, you can afford a $2,400 mortgage payment and say college is up. We want to be done with this house. Okay, so what are you going to do? We're going to split the proceeds, put the house on the market, sell it, or you can even rent your house out, y'all. That's another thing. Some people can Airbnb out their house. It depends on your HOA, so you have to be careful with that as well. So we've just covered the misconceptions of the mortgage company taking your home because you missed a couple of payments. Mortgage payment increasing. Let's touch on that. So we talked about the adjustable rate mortgage versus the fixed rate mortgage. Now, taxes may increase on your home. There's nothing you can do about that. Rent is going to increase on your home. Okay, if you are renting, what are you doing about that? You're still renting, right? And you keep going from rental to rental. So, mortgage payment increasing should not be too much of a factor if you have a fixed rate mortgage. Now, as far as your taxes going up, there's nothing you can do about it because that means, guess what? When your taxes go up, your home equity value goes up. The value of your home is going up. So you have more equity building up in your house. So that is another thing that people don't talk about. You have mortgage insurance premium or private mortgage insurance that you pay. Now, if you have a conventional loan, that can be taken off after you have paid a certain percentage of your mortgage payment. All right. And the principal. So those are things you can discuss with your lender. People don't know that. And that can take off a couple of $100s off of your mortgage payment, y'all. Refinancing is a thing that has happened and can continue to happen as mortgage rates go down. I did it for my house. I was able to take my mortgage payment down by almost $200. Okay. So you can do the same. There are different ways, of being flexible when you have a mortgage instead of having rent. All right. So it's not to bash anyone that's renting. It's just to educate those who are not aware of home ownership and what it can do for you. All right. It is to me an advantage, but it just really depends on your circumstances and it takes discipline. You have to have the mindset of a homeowner, just same way you have to have the mindset of being a business owner, a CEO, or a boss, or taking control of your financial future. This is all a mindset, right? So either you can do it because you want to do it, or you won't do it because you don't want to do it. And if you don't want to, that's fine. This is for the people who don't know, that did not know these things. So this is why I'm doing this video for you. So I hope you have gotten some form of knowledge from the video. If there are any topics that you'd like for me to touch on, things that you want to actually go over, please let me know. I'm doing a lot of home buyer stuff, but I would also like to do some things about home selling homes as well. We can do commercial, we can do land, whatever you want to talk about, just let me know. Investors, investors are a thing too. Just let me know. But like I said, I feel like home ownership is very advantageous. A lot of times people are not aware, but melanated people in particular were not. we didn't have equal housing opportunities until 1968. That was not that long ago. So I think this is something that we should all take advantage of, something that we should all utilize. Because if they wanted to take away equal housing for us and not allowing us to partake and practice in real estate, then that's taking away our generational wealth. And this is why we have a lot of certain people that don't even think that homeownership is attainable. It's not even a conversation. They continue to have a landlord, so they're not in control of, their living and housing situation. You get more control when you are actually in a home, y'all. You're not stuck. Remember, you can always rent out your home. You can Airbnb your home depending upon, the stipulations in your community, and you can also sell your home. All right, so those things are an option. You can get roommates in your house. And you're very limited when you're in an apartment dwelling. So I know people like to sublease and all of that, but you could take that risk if you'd like. But I just wanted to touch on some things that I thought were important for this video. Please like the video, share the video, subscribe, and like I said, comment, let me know what you'd like to touch on. And please share this. Share this with anybody that's renting, that are thinking about purchasing a home. Share this with people that, you think this could be of value to. All right. And let me know if this was valuable to you. I will be doing real estate Wednesdays with Tanita. Please join my Facebook group. That is Tanita, Tinita .Gresham, and it's relocate to Charlotte is one of my Facebook groups, and Real Estate with Tanita is another one of my Facebook groups. Let me see what else I want to go over. Also, you can follow me on TikTok. That's t.gresh underscore realty. You can follow me on Instagram. That's t.gresh realty. And you can subscribe to my YouTube channel, t.gresh realty, because I do go and visit a lot of I do open houses. I show homes to clients. I also what else will you see on there? I do videos telling you about different things about mortgages, real estate, and things like that. I tell you about the market. We also go over and visit places in Charlotte that I feel that people might enjoy, different parks, different restaurants, different entertainment places that you might enjoy if you've never been to Charlotte, if you're thinking about relocating to Charlotte, just things that I feel that may be interesting that I wish I had known before I, relocated to Charlotte. But I just knew that this was one of the places I wanted to come to because I had visited years ago, back when I did have a real estate license, back during that time frame that I was telling you about. And then I made Charlotte my home, y'all. So I am here now. Feel free to reach out to me if you have any questions. And I look forward to working with you all. Continue to be the CEO of your financial future. Create economic ownership, y'all, for yourself. How do you do that? Create a business for yourself. Be a homeowner, own some type of real estate, you all. I am signing out. And until next time, you all take care, stay blessed. Signing out is your real estate queen.